Morning, guys. It's Wednesday, June 11th, 5:25 a.m. Central Time. Grain markets are higher this morning. July corn futures up 3 1/4 at 4.42. July soybeans up 2 cents at 10.59 3/4. July Chicago wheat up 1 1/2 at 5.36. July Kansas City wheat up 2 3/4 at 5.30. July spring wheat up 3 1/2 cents at 6.16 3/4. We've got some friendly news with regard to the grain markets to start off today. Let's start off with the U.S. and China.
So the two nations have reached a consensus on trade. Representatives from both sides negotiated in London for more than 20 hours on Monday and Tuesday. We have reached a framework to implement the Geneva consensus and the call between the two presidents, U.S. Commerce Secretary Howard Lutnick told reporters. Chinese trade representatives made similar remarks. China has pledged to speed up the shipment of rare earth minerals, and the U.S. will ease some export controls. Lutnick said that the deal puts meat on the bones of last month's agreement that eased bilateral retaliatory tariffs. The agreement will now be reviewed by Trump and Xi Jinping.
Sounds as if the truce will continue. And ideally, if Trump and Xi agree on what was agreed to here, we could push forward and ideally take a couple steps forward. Maybe you reach some sort of trade deal. And maybe such a trade deal could involve some purchase agreements like the last one. If you guys don't recall, the last trade war was, during the previous Trump presidency in 2018, 2019. But then I believe it was in 2019 that they signed the phase one trade deal, which involved China agreeing to buy a whole bunch of U.S. ag products. Now, they never totally met the terms of the deal, but they bought a whole bunch of corn and a whole bunch of soybeans beginning in the second half of 2020. And those purchases were part of what triggered a big contra-seasonal rally in the grain markets in 2020. Could you see a repeat of something like that? Yeah, it's possible. I don't know that I'd bet on it, but the optimist in me says that, hey, maybe there's something here that maybe the market's missing, or that the trade is missing, or just something that's possible. So this is good news. The markets aren't reacting violently to this by any stretch of the imagination. I mean, beans are up 2 cents. They were up yesterday, but not a big rally. But all in all, I'd say this is kind of a feel-good story here this morning. We've got some more friendly grain market news potentially. Let's go to weather.
Weather forecasts have shifted drier for the U.S. Corn Belt. The Euro and GFS models saw fairly drastic shifts toward a drier forecast in the central and western parts of the region. While both models project near normal rainfall across the U.S. Corn Belt in total over the next 7 days, less than normal amounts are now expected in the west. The models were especially aggressive in removing rainfall from the state of Iowa. Euro model data also suggests that much of the region will see above normal temperatures during the next 2 weeks.
Okay, these are some of my favorite maps from our friends at CropProphet. If you guys are like in the commercial grain business, if you're trading on a fund desk or something, you should absolutely pay for their stuff. It's fantastic. So this map, if you guys are watching, this is change from previous days forecast for the Euro model 1 through 7 day period. And you can see that there was drastic removal of rainfall for the state of Iowa in particular. Today's forecast versus yesterday, also Illinois, also Nebraska, also South Dakota. The GFS looks very similar, especially with regard to the state of Iowa. Drastically less rainfall in the forecast than what was projected yesterday. Now, when you go to the Corn Belt as a whole, the next 7 days, even with the drier forecast for Iowa, you're still talking 102% of normal rainfall. But I think that I think you got to get a little bit more in the weeds than that. I mean, you look at Iowa, which is our largest corn producing state, and they're going to see half the normal rainfall over the next 7 days if this forecast is correct. The GFS ensemble is a little bit wetter, but the last night's lone GFS model in a vacuum was drier. So maybe a hint at some drier stuff here in the forecast. The 8 to 14 day, I still see no real problem, but you get out to that period and the forecasts become a lot less accurate. I've got a premium video I'm going to do on Friday about that. But in any case, you've got to shift towards some drier stuff here over the next week. And also temperatures are slated to trend above normal for a lot of the Western Corn Belt here for the next 7 days, and also through the 8 to 14 day period. So I don't know why the markets are up this morning, and this ain't much. I mean, 3 cents in corn, 2-3 cents in wheat, a penny or two in soybeans. But you've got some friendlier stuff today. You've got the U.S. China stuff. You've got some weather stuff that may be hinting at some drier conditions in the Western Corn Belt. So we'll see how these forecasts verify and kind of sort themselves out here today. Remember that GFS and these models, they update several times per day. So there could be changes even during the trading session today.
USDA will release its monthly crop production and WASDE report tomorrow morning at 11 Central Time. Traders expect USDA to reduce its projection of corn ending stocks for the current marketing year, likely due to a perceived increase in the export projection. No significant changes are expected with regard to U.S. soybean and wheat ending stocks.
Typically, the June WASDE is not your biggest report in the world. The one at the end of the month, the acreage report, and also the quarterly stocks report, that's a big report. This one tomorrow, typically kind of kick the can down the road, but I'm going to be curious to see what USDA does with the old crop corn situation. Do they revise exports higher? They probably should. And then if they do they counteract that with a lower feed number or perhaps some sort of adjustment to last year's crop? It just feels to me, and I think it feels to a lot of people like we're missing something here. Okay, so old crop corn carryouts sub 1.4, maybe it's closer to 1.3, yet nearby corn futures are 440 on the board. It just doesn't necessarily jive. Maybe this is overly simplistic, and the trade is just saying, hey, the old crop the new crop situation rather is going to be so bearish. We just don't care about these old crop fundamentals. Maybe that's the deal. Maybe we're just skipping past that and looking toward, hey, maybe it's 96 million acres and maybe a trend yield. Maybe they're thinking that. I don't know, but I'll be curious to see how USDA resolves that stuff. Shouldn't see a ton of if you see changes in old crop, you'll see it reflected on the new crop balance sheets. But this stuff is all smoke and mirrors. Nobody knows what's going to happen with the new crop. So report tomorrow.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
My good friend Shay Folk from AgView Solutions joined me yesterday to talk about farm adjacent income. Shay does consulting work with farm operations across the Corn Belt. They do everything from transition planning to budgeting, and off-farm income or jobs off the farm or sometimes adjacent to the farm are a big deal for a lot of farmers. And Shay talked about some common jobs and careers that farmers have outside of the farm, and whether or not they're actual strategies or are they distractions from your main business, which is farming. There was some super interesting stuff here, some kind of best practices that Shay has seen in his work with farmers and this sort of stuff. I did a corn marketing update earlier in the week, did have some new recommendations out. Yeah, the market's down, it sucks, but sometimes you need to look in different places to find marketing opportunities. When I do cash grain recommendations, it's very, very simple. I basically say, hey, I'd like to price X percentage of X year crop at this price. And we use the futures contracts to track everything. I can't track your basis, so we use futures as a benchmark, but it's super, super easy to follow. I include everything that I've advised, I think for 3 crop years worth now at the bottom of our email every single morning. So if you guys are looking for a simpler approach to cash grain marketing, you should check out our stuff. Pete will be doing Sunday weather updates every week from now through the mid part of July. These go out at 6 p.m. Central Time via text message and email to our premium subscribers. And Pete basically does a rundown of the weather and tells you what it means for the market that week. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. If you are the decision maker in your farming operation, this is must-have information. Give that deal a shot this morning, guys.
The U.S. and Mexico are close to finalizing an agreement to reduce steel tariffs. The deal would exempt a certain volume of Mexican steel imports from President Trump's recently announced 50% tariffs. The tariff-free quota would be based on historical trade volumes. The proposed cap would be set higher than that of a similar Trump-era agreement, which was aimed at preventing import surges. According to Mexico's economy minister, the tariffs are unjustified given that the U.S. exports more steel to Mexico than it imports. In 2024, the U.S. imported roughly 3.2 million metric tons of steel from Mexico, accounting for about 12% of total U.S. steel imports for the year.
Mexico has been the largest buyer of U.S. corn on the export market this year and will probably be again next year. So it's good to see progress and agreements, even though this is non-grain specific. Everything can tie back to the corn program if the wrong things were to happen. And it appears right now as if we're moving in the right direction with Mexico. And Mexico and the U.S. have been playing along together fairly well throughout all of this. And we hope that continues.
The U.S. Federal Trade Commission's antitrust lawsuit against John Deere will move forward. On Monday, a U.S. federal judge rejected Deere's motion to dismiss the case. The lawsuit, which was filed back in January, accuses the company of violating federal antitrust laws by restricting farmers' ability to repair their equipment outside of its authorized dealerships. The FTC argues that by limiting repair options, Deere is able to control prices and suppress competition. Michigan, Wisconsin, and 3 other states have joined the FTC in the lawsuit. Deere has denied any wrongdoing and has also criticized the lawsuit, claiming the allegations are vague and legally unfounded.
Are you aware, Mackenzie, of this right to repair movement?
I mean, I've read a little bit about it, but I am no expert to say the least.
So basically, farmers and independent, shops want to be able to fix their equipment themselves without the help of John Deere. And John Deere is apparently, based on the complaints, has made that difficult. So the right to repair thing is more of an effort rather than a law. Some states are enforcing it, and John Deere has done some things voluntarily. But as it stands right now, there's not a comprehensive federal law which to ensure that all farmers and shops have unrestricted access to tools, and software is one of the big things. I mean, the technology is so fantastic and complicated now that the technology piece and the software piece is probably just as important, if not more important, than some of the more tangible stuff. So I don't know. We'll see what happens with this. If you guys have thoughts on this right to repair movement, drop them in the YouTube comments section. What did cattle do yesterday?
Cattle futures were a tick lower to mostly higher yesterday. Live cattle were down $1.05 to $1.05 higher. Feeders saw gains ranging from $1.50 up to $2.47. Box beef prices were higher once again. Choice was up an impressive $4.51 at $371.76, a new all-time high, excluding the highs that we saw during the pandemic. And Select was up 91 cents at $359.84.
Outside markets fairly quiet this morning. The Dow's off 90 points. The S&P's up 10, but we made some fresh highs for this move in the S&P yesterday on a closing basis. Treasury's off just a little bit. U.S. dollar is about flat. Crude oil's up 96 cents in the July WTI at 65.93. Have a great day, guys. We'll be back on Thursday.